All right, welcome back to another episode of the Kitchen Table Podcast where business gets done. I'm your host, Ken Baden, and today we're by myself. I'm the guest. I haven't done one of these in a while, so it is a sort of a special episode. The reason why we're doing this, we did have a guest cancel, but not cancel, he had to reschedule, but I also wanted to do one of these kind of for a while, and the reason why is because I like getting just a quick 15 minutes or so and just giving just straight value. So this is probably going to be heavily centered on roofing, specific to like the industries that I'm in, but I just want to just dump a bunch of value on the audience and hopefully you guys get something out of it. So I just recently went to Minnesota and shot a podcast with Dmitry Lipinski on Roofing Insights, and did his radio podcast or radio show too. It was super awesome. Dmitry's an awesome dude, man. I really genuinely feel like he's a friend of mine at this point. He's just a solid guy, man. And when you meet people in business, especially in this industry, there's a lot of just full of shit people, especially just in business, but like both remodeling and roofing, you get so many people that, inflate numbers, inflated egos, just a bunch of nonsense. And to me, that's like, of what value is any of that? Right? Like, I'm a big fan of networking, and I'm a big fan of networking and getting to meet some genuine folks, because then we can really, there's a lot of reciprocity that can happen there, and we help each other just level up and be better, man. There are no enemies, only possible allies, right? Until you've proven to be my enemy, and then that's a different story. But Dmitry and I, we shared a lot of back and forth in terms of just kind of industry knowledge. Had me on the podcast, was kind enough to have me on the podcast. We did talk a lot about my past, which I get, that sells, and that's important to me as well, because I would be remiss if I just didn't take the chance to do that when I have that opportunity, because you never know who you might be speaking to that needs to hear that. But I do feel like I didn't shine a big enough light on retail. So today I want to talk about the roofing industry, kind of a state of the union, right? We've got issues happening right now in terms of the workforce with ICE that is impacting a lot of roofers. And Dmitry ran a whole, demographic, a whole statistic on how many contractors are reporting roofers that they've lost, or installers that they've lost, and not just roofers. I mean, it's just happening across the United States, across the entire contractors space or general contracting space. Several roofers are reporting, a high percentage of roofers are reporting, remodelers are reporting losing people, reporting people refusing to go to specific areas, or just impacting them in some way. So there's that's happening currently. And that could lead to work shortages. That could lead to increased costs, right? So the guys that you do have are going to want more, especially to go into certain areas, even just having to deal with the hassle, even if they're legit. And that's unfortunate, man, because I don't understand this angle where what was sold to us was like, hey, we're going to go out here and we're going to have the biggest mass deportation in history, but the focus is going to be on like the violent criminals. It seems and feels an awful lot like, at least in my world and in our world, like the focus seems to be a lot on like Hispanic folks, and I don't get that, especially because most of these folks that I've been dealing with for decades. Right? Whether it was my company or another company, we've just known them for years. And they're still here because they're legal. But like I said, they're even afraid. Because it doesn't mean that you have to be like, there could be a paperwork discrepancy. There could be anything that just wasn't done exactly right. Or even they could just be wrong. And I've just heard so many of those stories. And so like, they're just freaking scared regardless. And so they don't want to go to certain areas. And I get it. I just don't get the angle here. If the idea is to right what was wrong, which is this mass influx of folks being brought into specific areas strategically for what seemed like political gain, right? Whether gaining seats, or whether gaining just bodies for the census to count towards the electoral college or the votes, or how many votes that state gets, that would kind of make sense. I just don't like focusing like on the fraud, maybe. I don't know, that like 8-9 billion in fraud in Minnesota. Like how many of those illegal folks have been focused on, right? Or Ohio or any of those other places where we know there's all this rampant fraud, and you would think the attention would be on that. It seems like a lot of this time, effort, and energy is being spent on folks that just do nothing wrong outside of maybe they don't have like their T crossed or their I dotted, and maybe they even do and they're still being harassed. So I don't know. My 2 cents on it I just gave you. As far as the industry goes and what I think it'll lead to, I think it's going to lead to increased costs of work storages. Period. I mean, that's what it seems to be. If you haven't dealt with it, good for you. But in certain states, it's really screwed. I know in Minnesota, it's driven the cost up way, way, way high. And it's made even delivering on customer expectations and jobs difficult because you can't put in as quickly because your people won't go. And then you say, well, that doesn't make any sense. Anyone who listens to this podcast isn't going to bat an eye because you understand that the labor force is largely Hispanic. It just is, right? You're not going to get this like long line of people, American folks that are going to be knocking on your door, even if you wanted to try and install roofing. It's just not what's available, right? So there's that. And then we also have, the current socioeconomic climate with, all the dollar and really that's been something we've been dealing with for the last couple of years, like uncertainty in the market. Last year, what we saw was about a 19% drop in the roofing market as a whole across the United States. Some folks still benefited from like massive storms, and to them they were just up. We were really fortunate to be up last year, man, and grinded it out. A lot of retail-based, high-end, big-ticket, high-end retail-based clients here locally, from my research, actually struggled last year, or at least, relative to other years, took a little bit of a step back, mostly because of just the socioeconomic situation, right? Banks and financiers were not lending the way that they used to, so the rates suck and their freaking requirements are way out there. So like we're seeing denials at a rate we've never seen, right? So like customer decline rates were through the roof last year, right? So like millions of dollars lost and just not being able to lend money. So if your business model is predicated around financing, which is like 90+% of deals when it comes to like home remodeling and offering that type of model where you're heavy on financing, you probably took a step back last year. This year, hopefully, rates get a little bit more aggressive. We'll see. I think my 2 cents again on that is what we've had to do is just constantly be in search of whoever's got the best, who's buying the lowest, and who's got the best rates. It's a never-ending task. And ultimately trying your darnest to be at least on top of who you're sitting with. It makes for a lot more work, and sometimes you can do all the right things and you just happen to find yourself in a place where because to them 650 or below is now subprime. That's nuts according to 10 years ago. So trying to make sure you're positioning yourself in front of a client that is at least above that, ideally above a 700, that is, let's do a quick chat GPT. Let's see. What percentage of the United States of America has above a 700 credit score? Let's see. What do you guys think?
I'd say 22%.
22%? Wow, dude. 64%. It's way higher than I thought. I thought it was going to be 40. So 64%. Okay. And state by state is definitely going to vary, right? So the DMV is going to be different than Kentucky. All right, so 64% has a FICO score higher than 700, but that still gives you, a little better than half of a chance to be below that, and you're going to struggle to get that finance. So that's not great, obviously. It's just better than I thought it was. Still not great. So what other options do we have? Attaching yourself to lenders that might have, because those are unsecured loans, so attaching yourself to lenders that might have secured loan options. offering cash discounts, of course, but most people don't have that kind of cash just sitting around, especially in times like this. So, I mean, it's kind of just, riding it out and understanding that, it's, in my opinion, it's being a good steward of your time, effort, and energy, and focusing on what you can control. So those are the things we can't control, but we can control who we finance through, constantly looking for better rates and lower buying opportunities, collateral-based loans, things like that, thinking outside the box. So, because I think that's going to be an issue again this year until they drop rates, and we're just going to have to navigate this thing, man. It's always a roller coaster, right? And so, like, we had the years where everybody got approved, and then we have the years where half of people, or a little more than half of people, are getting approved, but it still leaves a good chunk that aren't. It's a lot of money left on the table. Could also be an opportunity for folks to explore other alternatives, like insurance restoration if you do roofing, but that's a whole other conversation. Insurance companies are behaving more and more poorly. They're doing more and more to put walls up between the contractor and the customer with UPPA law and things like that. I hear it pronounced UPPA. I like to say UPPA because I think it sounds dumber than UPPA. But you have UPPA law or UPPA law that says we can't act as a public adjuster, and here's what defines us acting as a public adjuster. And I think that is a really silly line, like even saying this, saying that, whatever. We work really hard not to do that, but, not everybody does. Now, having said that, they're also doing things like increasing the percentage deductibles, just flat out denying everything, just flat out telling you, like, we think you're acting as a public adjuster and we're not going to talk to you anymore, which was always a possibility, right? They could always say, like, yeah, we're not going to talk to you. They don't have to, right? That's where they have to talk to a PA. So if you're on the insurance restoration side and you're in a state that isn't like hail driven, where it's just like your work is just so prevalent that they don't have a choice but to keep up. And even then, it's just understanding what's happening in your environment, understanding that they're increasing or doing, understanding any exclusions, any recent upticks in increased percentage deductibles, ACV only policies. If you're a state that's doing like drop letters, right, like we see, in other words, insurance companies are saying, hey, your roof is about 20 years old. We looked on Google Maps. We sent you this letter saying you've got to go ahead and get this thing fixed within the next 30 days, or we're dropping you. So because we do both insurance and retail, we can act on whichever is kind of swinging better, more favorably. Like, for instance, if insurance restoration is just having all these issues, but retail is doing okay, we can kind of focus a little bit more over here. Right now, both have their pros and cons. So we're doing absolutely everything in our power to make sure that we're being on top of what's happening within the financing side, right? Constantly recruiting and trying to find good reps. Marketing has been really tough. Your ad dollars don't go as far as they used to. And frankly, with everything being a little bit down, you would think that we'd be able to get some market cap that we wouldn't otherwise normally be able to get. And I think we will. We were able to get a Super Bowl spot local, like a week before the Super Bowl. That would not normally be available traditionally. So, but it's still expensive. I think that'll come down some with traditional media. But we're going to have to be, as business owners, willing to adapt and be, adaptable and take quick action, decisive action. That is my 2 cents as how we are going to take. We're looking to dominate this year, not just get by, not just not lose money. We're not willing to accept that. So we look at this as it's just like any other market situation. When the market's down, some people look at it as, oh my God, the market's down. Some people look at it as an opportunity. I prefer to look at it as an opportunity, like market cap that wouldn't be there because these big powerhouses are normally just smashing these areas is now available where it wouldn't otherwise would be. So we can jump in, and we're going to. So we just got to be smart, and I would just encourage, being smart with your money and your cash flow, keeping a firm eye on the market, keeping a firm eye on like financing rates, insurance restoration, keeping a firm eye on what's happening, right? Like understanding that like these things change so quickly, and like We were just talking to Chris Zimmerman about the possibility of doing like this thing that he's doing, and I don't want to talk about it in too much detail because I don't know if he's comfortable with me sharing. But basically, if something were to happen and we needed to completely pivot, we're prepared to do so, right? Because we have a plan. So always having a plan and a contingency, I think, is a business owner's duty. And last but not least, I think if you are in the insurance restoration side, you have got to learn retail. You've got to learn to sell something. I think that the days of just like eating, first of all, the days of just like the gold rush, as they say, is probably over in a traditional sense. You can still make money in insurance restoration, you just have to work way harder. On the side that is Missouri or Texas, in those states where you just get so much hail and you're actually still just getting things bought, I still think they're going to put a lot of barriers in your way, like percentage deductibles and things like that, exclusions, denials. But if you get hit with a big enough storm, like there's going to be opportunity, a lot of it. If you're not in any of those states, then you really better be able to sell something. You need to, my suggestion, and look, I own a consulting company. It was the first company that I created, and my job back then was sales director. Most of my experience was in the sales side, building and hiring sales teams and teaching those sales teams to sell windows, siding, roofing, doors at a 40% close rate, minimum 35%. Most contractors do not know how to do that because they come from the world that is like insurance or insurance restoration. Knock a door, hey, look, we think you might have damage. Mind if we hop up there, take a look? If we do, find damage. Best case, you get this. Worst case, you're back in the square one. You need to understand a few things. You need to learn the retail side, the traditional retail side. One, you can make a lot of money in retail. It is traditionally these selling systems in retail, the most high charging companies in their industry are going to be retail based, right? Because they're selling systems, they're selling at top dollar, and they have the systems designed that can do it at a minimum 30-35% closing rate. You need to learn how to do that, right? You don't have to sell as high as they do, but these companies are huge. They probably have to do that, right? We don't, but we do need to, we have an obligation to learn a selling system, a sales methodology. We also have to learn two things: how and where we get leads, and how to close them, right? So the retail side is a setter-closer situation, meaning that you've got to have upfront capital to generate leads, and then you have to have closers that are capable of closing those leads in a systematic fashion to the tune of 30-35%. Oh, by the way, the leads that you get need to demo at a certain percentage, traditionally like 30%. I'd say probably 20-25 right now in canvassing. Call center is going to demo at a different rate, but you need to understand these things. Like, I have to have various lead sources. Those lead sources cost X, right? We need to make sure that they're selling at a rate of Y. Otherwise, we risk going broke. So I would say, before just trying to learn this on your own and risking going belly up, if you're an insurance restoration company and you want to learn retail, there are plenty of options out there for consultants. I'd stay clear of probably like the coaches, but like a traditional true blue consultant that's going to come in, teach you a selling system that has a proven track record. I, for one, Baden Consulting, like I am taking clients on. This is not, I guess this is a shameless plug. If you hear this and you're interested, hey, we'd love to take you on. But we only take on a couple clients a quarter. So I can tell you that, however, if you reach out to me and we're not able to, I can certainly point you in the direction of some good people that I can personally vouch for, that know the industry, know it well, and you will walk away with the ability to run a retail system and a firm understanding of the retail system and how it works. Whereas we can teach you that, we can help instill that into your company for you, and even oversee it for the remainder of the year to make sure that it works. Guarantee the results, so to speak. So that would be my recommendation, not just because that's what we do, but because there's a lot of risk just trying to figure it out yourself, and you can spend a lot of money that you don't need to spend versus spending a little money learning it from somebody who's supposed to help not just teach you, but put that into your system, but guarantee results. Like, that would be the thing. Like, hey, what's their expected return on investment from this? That would be my first question. So I'm excited for 2026. It's the year of the horse. It's the year of shedding, negative stuff and kicking ass and taking names. There's a lot of awesome stuff out there in the ether and in the air that suggests this is going to be a badass year. I know the market conditions are a little like whatever, but I firmly believe at the bottom of my heart this is going to be a badass year. I'm really excited about it. We're going for broke. Like I said, man, you can look at the market one of two ways. You can look at it doom and gloom and, oh my gosh, it's down. Woe is me. Or you can look at it like this is an opportunity. I choose to look at it like this is an opportunity, and we're going to go eat up some of that space that wouldn't otherwise be there. And at the same time, man, look, I understand if you're scared or you're worried. If you have any questions, this is why we network. This is why I constantly put myself around the best in the business. John Sinek, Chris Zimmerman, Adam Vidsman, Dmitry Lipinski. This is why I surround myself with guys like that. And then other extremely talented business owners, Brandon J., Todd Price, John McCambridge, Adam Champagne, Tony Flatham, like these guys that have been there, done that. And we can all Kurt Lennington, bounce ideas off of one another and really fact check what's working. So I suggest you develop that network if you haven't already. But if you need to, reach out. I'll answer any questions I possibly can. And I'll help whenever I can. And I'm always looking to add to my network. Thank you guys for listening today. 2026 is going to be a badass year. I am claiming it. You should do the same. If you're not in roofing, I know this probably wasn't the most fun episode for you. You probably tuned out a long time ago. But if you are in the roofing or remodeling space, I hope you got some value from this. These are a lot of the things we talked about on Dimitri's episode. Learn retail. Learn how to sell something. Go fucking get it. See you guys in the next one.